Hey traders, welcome to Charts and Coffee. Great to see everyone. Hope everyone is having a great morning, and there are our charts. All right, so let's get to it. We have an interesting week on hand. I was just recording a video for countdowntrader.com, and in that video I was saying, it's easy to start to want to phone things in as we wrap up the year. It's the last 8 weeks. And instead of doing that, instead of saying, hey, it's kind of been a wonky year. Uh, let's see, TV. Oh, trading view should be working there, bot. So instead of thinking about whether or not, the markets are going to end higher or lower, let's just stick with the plan, which is ultimately, are we seeing any kind of clarity that would give us an edge? And last week, we broke certain levels. And these are levels that in some symbols we've broken before. But what's really interesting is the timing of when these levels have been broken. And the one that comes to mind would be things like financials. The fact that we were able to, and we're still not clearly above, say, 33.70, even 34, that would be ideal. But we're hanging in there. So on the heels of the overall movement higher in terms of what we're seeing through the 200, we have to remember, if we're looking at the 200, that's the difference between the bullish and bearish equator, right? That's where we're focused on whether or not, when a broad group of people are taking a very generalized view of what a symbol is doing on the daily, it's always on the daily, gang. Are they generally bullish or bearish? And that 200 kicks that shift, right? So here, let's take a look at the Dow. Why the Dow? Because if the financials are moving through key levels, the number one weighted sector in the Dow should be doing the same. And then right after that, I'll be looking at the S&P. Now, the S&P might benefit from two things. If financials can maintain some support or strength, and tech, XLK, NASDAQ can remain strong, oftentimes the ES will outperform the YM. And if the financials really get going, the ES have that opportunity even to outperform the NASDAQ. So these are all things that we're looking at as we go into the last 7-8 weeks of the year. Now, there's two other symbols that are definitely on my radar. A shift in bonds. So this is the long bonds, the ZB futures. It may not look like much of a shift, right? So let me show you what I'm looking at so you can see why I view this as kind of important. First of all, we haven't seen neutral and bullish candles in the bond market in ZB since July. And the overall downtrend, while it has had a few hiccups, that move, so this is what I mean about timing. That move there, yeah, helpful. This is on the heels of the FOMC, right? And ultimately, give me one sec. Ultimately, what we want to remember is that if we are viewing the overall movement from downtrend to neutral, based on FOMC shifting the overall picture of 1 to 2 rate hikes before the July 31 meeting, we're in good shape, right? We're okay. This shift is going to be way, way, way better in terms of yields going down. And this is not just for the long bond. This is for the 10-year as well, right? So both those things are happening. We'll keep an eye on that. All right, next up is the 6E. And I see there's a question on the 6E as well. So let's head on over there. All right. So yeah, good morning. Good morning. What about the 6E? Yeah, let's get into that because I think that's going to complement the yield conversation. All right. And that is, if I'm looking at the euro, ultimately what I have here, we're still running into resistance, right? I tell you, we're still running into resistance. And what does that mean? If the 6E is running into resistance, right? If we're running into overall movement to the upside, that's a ceiling. That means that the dollar is running into support. And that, while it's not a big deal, gang, dollar strength is not the end all be all of where equities are going, right? Not at all. But why does the dollar as a harbinger to what the 6E is doing, to what yields are doing, or even just, it doesn't even matter the order, right? Chicken or egg is a conversation in trading that doesn't really matter. What came first doesn't matter. It's what's moving in unison and why. So this is where we set aside correlation and we move in causation. If the monetary policy is going to go a little bit more dovish, at that point, what we can say is yields are going to start to go down and the dollar is going to start to go down. So clearly, we haven't yet convincingly moved into a confident the Fed is going to cut sooner rather than later stance. Otherwise, euro should have been able to take this 107, 108 handle out pretty easily. I would not be really super bearish in the euro, but let's acknowledge that we're still in the bearish hemisphere. Okay. All right. Give me 1 second here. All right. So next, we have a question from our essentials room. Hey there, Coop. If I'm scalping ES, well, scalping is definitely something I would say would be a question for the bot, Coop. So anytime you got Lorna bot here in the essentials room, she is our scalping specialist here, but I'll do my best to answer. If I'm scalping ES futures, so that'll be ES or even the MES, gang. What are the top other futures that I should be watching, which influence my entries and exits? As far as other futures, Coop, so if you're scalping, I'll tell you, and again, I would probably defer to bot mostly on this. So let's take the scalping part of it out and let's just ask, what would I be looking at for ES futures? What I would say is focus on the NASDAQ primarily and then the Dow. And ask yourself which one of the futures contracts, right? Which one of the futures contracts is it tracking with? So if you're looking at a 1 minute, 2 minute, right? I would probably say, and you can see there, Lorna Bot mentioned, and for those of you watching on Twitter and all the other socials, the answer is nothing else, right? Nothing else, because you're already making such quick decisions based on shorter term time frames. If you're going to go look at 2 and 3 things, it'll probably slow the process down to the point that it begins to degrade the quality of your fill. And while quality of fill is always important, it is really important in my experience in terms of very short term trading, whether it be scalping or whether it be day trading, because we are looking for smaller, smaller risk relative to, say, swing trading, but it's also smaller reward because we're looking at a smaller time frame, smaller window of opportunity in terms of time of day. So that fill really is very, very important. So I would say, generally, before you even start scalping, Coop, know whether the S&P is moving with the NAS or whether it's moving with the Dow. Know whether we have strength in tech, financials, healthcare. Know whether those things are already in play. So it's more along the lines of your scalp is going to, for me, right? Your scalp is going to occur in an environment where you're already pretty much in tune with what's happening, right? So, I would say look at which one of the other major indices it's moving with, ES with the NAS or ES with the UIM, and then just get to work. Yeah. And focus on the sequence. Focus, trust your numbers, trust your gauges, and go with the setup that you see. All right. Next up, any thoughts on UNG today? All right. So let's go take a look at Natty. Natty Gas has woken up. It's been a long time. Let me move this chart over here. All right. So Natty Gas has woken up, right? Now, you might say, Rog, doesn't look like much. I wanted to make sure I put in the whole year, right? Rog, it doesn't look like much. This is true. However, 200, sloping down, flattening out. I don't really care about slopes. What I do care about is where the 200 and price collide. Where does price interact with the moving average? And what you'll see there is since October, price is ready to do battle with that 200, with the equator, and it's ready to try to move up into the bullish hemisphere. And while it's not super convincing, it's definitely not as bearish as it once was. And what do we know? I'm not plotting red grab candles, as you can see only. Grab, by the way, stands for green, red, and blue. Red is bearish. Green is bullish and blue is neutral. So I'm plotting more neutral and green. You can see that's been happening since June, but that has not culminated in taking on the 200 until recently. So October was a big month for Natty, and that's Natty gas futures. Now let's take that to the ETF alternative. And the question is, what about UNG? Now you might say, Rob, UNG hasn't done any of those things. And the reason I started with NG, JR, is because NG is a much more complete view of natural gas. UNG is the ETF that will reflect what's happening in the NG futures. And UNG is going to trade 9:30 to 4. Natural gas is a much bigger trading window in terms of daily session hours. Ultimately, whatever natural gas futures are doing, I can use UNG calls. In this case, I want to be long for the most part, but depends on your time frame and direction. I can use the UNG ETF, UNG puts, UNG calls as a proxy for the highly leveraged and often volatile natural gas futures. There's a couple symbols, by the way. I mean, this is related but not related. There's a couple symbols that I recommend a lot of traders use the ETF instead of the underlying futures. Silver is one of them, and Natty is another. So while UNG may not look interesting, it really does, because natural gas is breaking into a zone where we want to start looking to the long side. Yes? All right. So speaking of, let's stick with the currency, with the energies. And the question here is about crude oil. What's happening with crude? I don't know. I'll be straight up. I have no idea. Ultimately, if I'm looking at the overall movement in crude, it should have stayed above the 200, and it's not. I'm sure there's plenty of whys. I'm sure some of them are accurate. I'm sure some of them are inaccurate. I'm sure some of them are just guesses. So rather than my guessing at what's happening with crude, I'm just going to accept that what's happening in crude is not as bullish as what we saw when crude was crossing up through the 200, when it was testing the 200 and bouncing, whether that be back in August, whether that be this area in early October. Here in late October, early November, we're not seeing traders step up at the $80 per barrel level. We're not seeing traders step up at the 200. So while crude was definitely something I have loved trading, XLE, crude oil, Exxon for many months, October really put an end to that. The longer we persisted with crude in October, the more it was clear that the sentiment is shifting. Not the trend quite yet. We're not in a downtrend, but we broke the uptrend that was in crude through September in October. So we're not in a downtrend, but it's hard to be really bullish. It's hard to be really bearish. What I would say is shorten the time frame. And just for now, perhaps just acknowledge that the disconnect between the 2 million barrel per day cut, that should be bullish to crude. The disconnect between the OPEC messaging of we need more investment in crude, demand is going higher. That was the narrative that kept crude afloat. And then I guess now either people don't care or it's been fully discounted. Regardless, I'm gonna sadly have to say I'm gonna leave this corner of the broader markets alone, meaning energy, XLE, CL futures, even USO, unless we're going to day trade it. But again, if up is down and down is up, and I don't know what actually is kicking off a bullish or bearish catalyst for this thing, I might just say leave it alone. And here's where I say leave it alone. There's a lot of other great things that are happening. There's a lot of other moves, especially in indices and sectors that are clear. As far as TLT goes, D Bolton, nothing to do yet. We kind of covered the ZB, and TLT would be that ETF alternative there. So I like that one a lot in terms of what the shift has been in terms of the timing of the ZB multi-trend shift and when it happened on the heels of the FOMC. So what about Google? Let's go take a look at Google. Anthony, Google is part of that XLC, right? It's Meta. It's Google. It's part of the NASDAQ #2 weighted sector. So when I take a look at Google, right? When I'm looking at Google, what I have here is a bounce off the 200, which is exactly what I would want to see if there's a willingness to keep a stock, any symbol, above the 200 in the bullish hemisphere. And this is actually going to bode really well for the NASDAQ generally, which, by the way, gang, let's not forget, the NASDAQ is the most bullish of the four indices, more bullish than the S&P, more bullish than the Dow, and certainly more bullish than the Russell, which is actually the most bearish of the indices. So when we talk about where there's weakness, we talk about where there's bearishness, it's the Russell and its regional banks. But when we look at each symbol for what it's doing, not wanting to paint the whole market with a single brush, if we're looking at that, then we want to remember that the NASDAQ, XLK, and XLC are outperforming. In fact, most of the Magnificent Seven look rather magnificent-ish, except for Tesla, which I've been saying, hey, gang, Tesla's still going to have a lot more downward pressure. All right, next up, Will asks from our Essentials room, I'm not sure if I discussed indices levels yet. Am I looking for a pullback for entry today, given that it seems a bit extended for the short term? So, Will, I never believe anything's extended unless it's in chop, right? So and it depends also on the time frame, Will. So from a day trading perspective, I have no idea, right? There's no way to talk about a symbol without talking about a time frame. In fact, whenever I'm on Twitter or whatever, and there's a disagreement about what a symbol's doing, it's usually not a disagreement about the symbol itself, but rather the time frame, the slice of psychology with which we're analyzing it. So if I'm looking for a pullback because it's extended, again, extended based on what, right? Well, I don't have that reading. Extended based on what indicator are you using? For me, this would be the DPMR, right? If I'm looking at the longer term time frame, daily, or even a 60-minute time frame, I'm actually not even allowed to short the 5-minute. It's in an uptrend at the moment. I'm not even allowed to short the 60-minute. It's in an uptrend. So having an indicator that actually prohibits one side of the trade is really, really powerful. Most traders will come at a symbol thinking, well, I could be long or I could be short, which may be true when we slice up the different time frames. But once we choose a time frame, let's say I'm going to day trade this morning with the futures folks and the sector secrets mastery folks, it's long only until that green structure gives way to a neutral or a downtrend. On the 1 hour, same thing. The only place that I could say we could look for a short would be the daily, and this is the NAS I'm looking at here. So as far as ES, for example, jump on over there. See, ES could be a little bit different, right? I'm neutral, and I'm neutral. So you might say, okay, Rog, there might be potentially a 5-minute fade around 4,400. Very much so, but I don't have a fade on the daily until about 4,450, right? So what about the Dow? So this is where we have to go through every time frame that we would consider a decision-making time frame. For me, the 5-minute is for day trading. The 1 hour is for swing trading with a 1 to 3 day time horizon. And the daily time frame is for swing trading with a 2 to 10 day time horizon, right? So each one of these is going to have a job. And their job is not to talk to each other. Their job is not to agree. These aren't the three musketeers, right? Their job is independent. They each have a responsibility to show me the psychology of that slice of time, and then to show me whether or not there is structure that favors follow through. And so when I look at follow through, I'll tell you, here's the other question. Well, which one has potentially the best follow through? Where is there a trend? And that would actually be this morning. I'd probably focus on the NAS at least early on because there does seem to be a trend there. The NAS is a trend. ES is trying to trend because it tends to coattail the NAS more often. And Dow and Russell, I'm looking at my 9 screens here again. Dow and Russell are neutral. So I'd focus mostly on the NAS. There's an edge anytime we have the clarity of a trend. So that kind of kicks off where I'll be looking first. All right. Okay, gang, as always, thank you for being here for Charts and Coffee. We are still trying to broadcast a trading view. There's been some issues with that, unfortunately, but hopefully we'll get that sorted out. If not, we are always live on the Simpler Trading YouTube channel, my YouTube channel at Raghee Horner, as well as Twitter, which is at Raghee Horner as well. All right, gang. Tech is great until it's not. All right. I'll see you tomorrow, same time, same station. Be good to each other. And in the meanwhile, hey, keep an eye on that NAS. Keep an eye on tech. I'll talk with you soon.